Hey, welcome back. Hope you're having a great day. If you've ever considered investing in anything, stocks or Bitcoin, I want to explain to you today why every year when you go to the grocery store, eggs and milk get more and more expensive. Why would milk become more expensive? I thought cows ate grass. How is it so expensive now? Well, it's not. Your money is worth less than it was. And I'm going to explain how that works and why that led you to think about investing in stocks. And I'm going to show a better alternative for you to maintain your money. So this bright line is the stock market. This is compared to dollars that just keep getting printed. And every Western economy, that means every central bank system, prints money about the same rate as the US to keep the expansion going and to keep leverage over other nations. It's a kind of a weapon. So if your money keeps getting worth less and less because there's more of it, how do we preserve your money? Well, we buy something that doesn't grow in quantity, but that maintains its value. And the main thing in the world today that doesn't increase in quantity but maintains its value is Bitcoin. Because as long as electricity exists and civilization exists, this will exist. It is a totally decentralized network that will continue to exist as long as one node exists somewhere in the world. And it can be recovered at any point in time. And at this point, it is integrated into societies all over the world. PayPal, Visa, Goldman Sachs, now BlackRock. So this is a foundation in the economy, and it is the only factor that doesn't grow in quantity, and in fact increases in scarcity over time, and that maintains its value. That is why Bitcoin just keeps moving up and to the right. It grows more than the stock market because it is more scarce. Now, ever since 2010, the economy has recovered from this mega crash in 2008. And if we compare it to the unemployment rate, we can see that this predicts the future of the stock market. In 2010, unemployment rate dropped steadily all the way to 2020. This peak is the COVID crisis. To get out of this crisis, the Feds printed a ton of money. This past year is the first time in a long time that we have had a steady growth in unemployment. Previous times that this happened, previous instances in the 80s and in 08, collapse of the stock market. This is a mega crash. If unemployment peaks again, as it has 70, 74, 82, we might have another collapse like this. Every time this happens, it is after a huge peak. Could we be close to something like that now? It's not impossible, but we haven't had this huge peak of this blue wave which measures the overall economy. So we haven't had this huge explosion leading to a reason for this collapse. It has been very measured. Even though we're close to some kind of peak and collapse, we're not there yet. But it is a reason to be cautious when we invest now. Next up, I want to do a follow-up on the dollar versus Bitcoin. Every time the dollar crashes, Bitcoin goes up, dollar goes up, Bitcoin crash. But this only measures the last 10 years. We haven't seen what happens in an economic recession. We haven't seen how Bitcoin does in this because Bitcoin didn't exist. It was created here. So it has never experienced this before. I don't think it will keep adhering to these waves. If we have a real crash, we could see a continuation of the dollar, but that is why I track the US dollar here. Finally, I think Ethereum is a really good measurement of risky assets. these huge wicks here. And these wicks, if we measure the previous ones, here and here, they usually represent some kind of bottom. These are not indicative of a continued crash. In a continued crash, Ethereum just loses value. And if this descending wedge is going to continue, I expect it to at least break out from the 3,000 level, perhaps even now. And that's positive for all altcoins, not just Ethereum. All altcoins will do well. And a good measurement of when Ethereum has bottomed is this stochastic indicator. It is currently at the absolute bottom, and it has just reached the bottom and can continue for quite a while, of course. This area was the bottom, this area, here, this, and here. Every time the stochastic indicator reaches a bottom, it is a great time to buy, and we're currently at that bottom now. If the economy collapses, of course, this is not a good investment. It's going to go down. But then everything is going to go down, and you just have to prepare as well as you can for that to happen, but you can't count on it. Finally, if you're into stocks, there is an ecosystem around Bitcoin, which is the mining companies. The mining companies, like Riot, also function on the Bitcoin cycles. And every cycle, these mining companies explode in value and then go down. This is the 2017 peak, and this is the 2021 peak. So if we get another area of money printing like we had after the COVID response here, and as we had here in the peak of Bitcoin in 2017, then I expect it to do the same now. We have some other companies, Marathon, of course, same thing, 2017, it had a peak, 2021, if it happens again, this is a growing company, it would keep going up. Coinbase, much more recent, 2021 peak, and I expect the same now. So how do we know when that happens? Well, Bitcoin and the stock market is the bottom graph, Bitcoin is the top, they perform very similarly. When Bitcoin peaks, the stock market tends to peak and then crash. Bitcoin peaks, the stock market peaks, and then a crash. Now, we're approaching a peak, but there will be signs in the previous graphs that we've looked at. Those usually indicate the Bitcoin peak, and the Bitcoin peak happens a little bit before the stock market peak. So if you're into stocks, you should follow Bitcoin, and if you're into Bitcoin, stocks are a great way to easily mark bottoms and tops, as you can see here. The Bitcoin price is predictive of future stock prices. Subscribe and like the video.